All right. What is up, traders? What's up, tycoons? Super excited for today's video. Treasury yields are spiking tremendously. We just had, NFP non-farm payrolls come out. And, at first glance, the stock market was crashing. TLT is crashing. Treasury yields are rising. We're going to see if that continues throughout the day. But we're going to do a nice breakdown of TNX. We're also going to, of course, go over TLT. Now, a lot of people were telling me I was way too bearish when we were around this 89 area. And I was saying that it's very possible to me that TLT could come down to the $80 range. We're going to break down the analysis and go over why in today's video, but there's lots of important data and covering, the massive amounts of shorts that we're seeing in treasuries. Okay. We're also going to take a look at US housing affordability. We're going to take a look at consumer savings. We're going to take a look at consumer debt, basically. And then there's lots of bankruptcies right now. Okay. We're also seeing the sharpest drop in aggregate positioning, and we're seeing just total net call volume close to a 10-month low. Lots of important data that we're going to cover in today's video. But as always, the content provided on the channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. I do want to mention I started a completely free newsletter. All right. It's called Investment Intelligence, giving out free, valuable finance content every single week. And if you're ever wondering what some of the stocks are that I'm looking at, or some of the different plays, commodities, different things, I put out free trade ideas in that newsletter. This was one on Tesla over a month ago. You can see how that play turned out. It was very nice. This was one on ExxonMobil, going over some of the conditions that you're looking for these trades to work out, such as the RSI breakout and MACD crossover. Both of those happened. That was a nice trade as well. Even SWK, which is a short position. So not all of them are long trades, right? And going over the rising wedge and giving the targets, you can see how that one played out very nicely here as well. So sign up for the newsletter. There's a link in the description. If you guys are fans of free, valuable finance content as well as free trade ideas, you'll really enjoy it. And if you ever want to request a specific YouTube video, you can come here on Ko-Fi, click on the commissions tab, and in here you guys can request a specific video on the topic of your choice. We've already recorded a few of the viewer requests, and you can also book a 30-minute or 1-hour session with me if you guys are interested. All right, I do those one-on-one sessions every single week. And if you ever enjoy the free, valuable content I put out here, you can click on this buy a coffee button. It's basically a way to leave a tip or donation. Now, let's get into it. So U.S. Housing Affordability Index is at new record lows. All right. And not only is treasury yields rising, causing mortgage rates to rise. Okay. It looks like they're going for 9%, 10% now, the way treasury yields just keep rising. But the housing prices have like really not even started falling. Okay, they're actually holding up. So the houses are still really expensive, and the mortgage rates are just so high right now. So that's why we're seeing the housing affordability index at new record lows. 29% of consumers indicated that they do not have any savings. Okay, that's what the blue is on this graph right here. All right, 29%. And you can see that this has been pretty consistent since the middle of the year. Okay, really since the summer, we've basically seen it where people are just saying that they don't have any savings at all. If we come over here and we take a look at the cost of carry for existing consumer debt, not counting mortgages, that has skyrocketed. So what you have is the interest rate payments, a percentage of interest income in blue, and then you have the interest rate payments percentage of your wages and salaries. And just look at this thing absolutely skyrocketing here. And of course, this has a large part to do with, the Fed fund rate rising so much, treasury yields rising so much, banks are hiking up credit card rates, auto loans are just skyrocketing. And this is, a thing that is a really big cause of concern, and, could lead to a recession, right? Right now, the bond market is really going up because, the job numbers come in, and it seems like the labor market's really strong. And technically you can't really have a recession without the labor market breaking, and so yields just continue to keep rising. In 2022, yields rose because they were pricing in Fed rate hikes. Okay, the Fed, yes, they may hike rates one more time, maybe two more times even. Okay, and people aren't even ready for that. But that's not going to cause the treasury yields to keep skyrocketing the way they are. They're skyrocketing right now because they're looking at the labor market and saying the labor market is just too strong. Now, if that turns around, okay, you're going to start seeing treasury yields start crashing. So what happens is in a recession and, in economic uncertainty, the treasury yields are actually going to go down, causing the price of bonds to actually go up. So, if you're worried about a really big recession, a good way to hedge yourself is actually going to be with a bond portfolio now. Okay. Bonds are actually very attractive, not only due to the yields and being able to hold to maturity, whether you want to do short-term treasury bills or long-term treasury bills. If you go for the long-term treasuries, there's a chance that you could get good price appreciation on top of the yield. If a recession comes in late 2024, maybe even in 2025, that's kind of how you need to think of things. Okay. It's very hard to time the bottom right now in TLT because treasury yields just see no sign of stopping and they just continue rising, continue rising. Now, nearly 1,500 small businesses filed for Chapter 5 bankruptcy this year through September 28th, which is nearly as many as in all of 2022. And we still have another quarter to go left in the year. Okay, so again, if you're worried about this recession, you need to start paying attention to the bond market. All right. Now, the stock market typically doesn't always perform terrible in a recession. Okay, that's kind of a little bit of a myth. If you go and take a look at the stock market performance during recessions, it's not always red. Okay, there are green years, there are positive years, oftentimes because the stock market prices these things ahead of time. And then when you're in the recession, they're pricing in growth in the future coming out of the recession. Now, it was one of the sharpest drops in aggregate positioning since early 2022. And, we're seeing a lot of things sell off here recently. This was one of the fastest drops, again, since early 2022. When you look at consolidated equity positioning and the rolling weekly change, you can see this drastic, sharp decline right there. And the total net call volume dropped close to a 10-month low and is broken out of its longer term range on the downside to the second percentile. So again, we're seeing it here at lows that we haven't seen in a long time, right? And of course, everything is dropping now, in the market here lately, and there's been lots of pullbacks, especially since, the highs around August. We've just seen consistent pullbacks, and we're seeing a lot of positioning reflect that. When you take a look at in the US, CTAs are short $17.5 billion worth of equities after selling $59 billion over the last 2 weeks. This is the largest 2-week selling we've seen since COVID. So, we're just seeing lots of uncertainty, lots of fear, lots of doubt in the market, and lots of selling, and it's really being reflected, through the price of some of these stocks right now. Now, we talked about this briefly earlier, but short positions in U.S. Treasuries have reached new all-time highs and could lead to strong price reactions in case of a short covering rally. This is essentially talking about a short squeeze. Okay. Bill Ackman is famous right now for going short treasuries. Okay. He was going short treasuries and he announced that a while ago. He's got to be doing very well on his position if he's still holding it. Treasury yields have continued to skyrocket since then. And, just look at it, guys. This is 2023 here. This is the massive amount of short positions in US Treasuries. And this really could cause a giant short squeeze, right? If all these shorts start covering at once, and then you have retail who's been consistently buying. Okay, TLT has, in the last time I checked, was the second highest in flows, right? In inflows, so meaning people buying them, right? Now, just because people are buying TLT doesn't mean necessarily that the price of TLT is going to go higher. You have to remember it's reflected off of US Treasuries and US Treasury yields, and it's just an ETF. So more people buying an ETF isn't necessarily going to, change how the ETF is valued and how they come up with the price of the ETF. But TLT, last time I checked, had $750 million in inflows into it. And if all of these shorts end up covering, right? I mean, we know how a short squeeze works. It's very possible that we could see a massive short squeeze in the bond market and in treasuries, but you need to be really careful trying to play a short squeeze. I see a lot of people in the comment section talking about TMF. I know there's other YouTubers out there buying TMF. I've never really been saying TMF. I've actually been one of the only people really telling people that, hey, I think TLT is going to come down. And people thought it was crazy when I was saying it was going to come down to 95. I really didn't think things would get this bearish, but we've had some levels here, and after reevaluating things, it looks like this triangle pattern here, which was really confusing when the stock market bottomed in October, you can see, TLT put in a bottom right there around that time, and we've since broken through those lows. And it was really confusing because we were seeing squeezing, we weren't seeing clear direction. We were waiting to see where we're going to break out to the upside or to the downside, and we've gotten that downside move. And and now after we completed wave 4 with the triangle pattern here, all right, we're looking to get a 1, 2, 3, 4, 5 down. Now, these analysis are just a guideline, okay? I don't have a crystal ball. It's not like I know exactly how these things are going to play out. I thought wave 3 was going to top out here or bottom out around $89 on TLT, and it's just continued to drop lower and lower and lower. So we're still going to be looking for a wave 4 bounce up, and that could actually extend these wave 5 targets to the downside. But for now, I'm keeping these levels here. We have $80.26. I think it is a possibility that TLT comes down. Now, have I been shorting this, right? No, honestly, I haven't. I'm not really hoping for TLT to come down this low. I'm more on the camp of I'm going to sit on the sidelines. In times of uncertainty, cash is a position. Okay. And what I mean by that is you don't have to always feel like you need to be in a trade, like you need to be in anything, right? The last 2 trades that I've done on TLT actually went long. I went long right here. Okay. The red day, and then we had one green day. I got out real quick, right? I was trading call options, very volatile. And then, the last time I got in TLT again was over here. All right. And it seemed oversold to me. Got into call options, swung those one day and sold out of those, just taking whatever little profits I can get because, there's lots of uncertainty right now. And we're seeing TLT gap down again because TNX is absolutely skyrocketing. Now, if TLT does start to rally, okay, that $89 price level is going to be very, very important, right? Even if we rally and we reject here, it's and ultimately if we flip this area to resistance and stay below there like we did over here, it's very possible we continue heading lower down to that $80 range. Now again, that's a range. We may go down to 78, we may only go down to 82, but ultimately I do think that it's very possible TLT comes to there. And the reason being is because TNX has just been so bullish, right? We went over the price targets in the last video, and we were tracking here originally, right? And since that video, we have broken out of this bullish channel to the upside. All right, and we hit that target right here, 4.894. And a lot of people were like, you're just so bearish, it's not going to go that high. There's other people saying, yes, we're for sure going to 5%. To me, it seems like there's almost no doubt that we're going to 5%. Now, does that mean in the short term we can't pull back? No, but ultimately, I think that really 5.04% is kind of the bare minimum for the bullish price targets here. 5.121 is going to be another price target, and ultimately I think that's going to be wave 3, and then we'll get a 4 pullback. Okay, now wave 5 could be topping out here, and this is wave 5 of 3, and so this could be the wave 3 top, and then things pull back, and then we get the wave 5. But for now, I'm just leaving this how it is, and we're going to see, is 4.894. That's where we hit this morning. Okay, you can see we exactly hit that level. It's very possible that that's the wave 5 top, and we're starting our wave 4 right here. Okay, so wave 5 of 3, and then you'd look for a wave 4 pullback, and then your wave 5 targets are up here. Depending on where things go, it's going to be anywhere from 5.121 all the way much higher. Okay, but for now we're just tracking these 5.410 and 5.561. We're going to see what can happen there in those. There's lots of gaps down to fill on TNX, and TNX typically tends to fill these gaps. Now, the big thing, and if you've been watching my videos on TLT, sometimes these gaps take forever to fill, right? If we go back here, this gap was all the way from the beginning of November, and that gap didn't fill until August of the next year. So it took a very long time for that gap to fill. And I'd imagine it's going to do the same for a lot of the lower gaps down that TNX has. Now, short term, if we end up pulling back, it's very possible we can come back down to the 4.4 region, right? We have a gap there. We also have a gap here right around 4.5, 4.6. Those are some areas where price action may try to fill those gaps, when things cool off in the Treasury yields. But you got to remember, we have CPI coming out very soon. We have PPI coming out very soon. Okay, that can push these yields higher or that can push these yields lower. But ultimately, I'm still pretty bullish on the Treasury yields. All right, now that's basically my take on it. I'm kind of just sitting on the sidelines for the most part. If I do some trades in the bond market, it's going to be very short term. It's either going to be a 1 or 2 day swing, or it's going to be some intraday day trading. Remember, cash is a position, guys. You don't have to force yourself to be in anything, all right, and feel like you need to be in anything. You don't have to listen to what everyone else is saying, all right. For a long time when TLT was in the hundreds, it was very contrarian of me to say that, I think we're going to come back down, fill some of these gaps. And, I was talking about $87, $80, $90, different things like that. And, people were just getting so offended. But at the end of the day, you just have to trust your analysis, right? If you have a method that works for you, all right, and just make sure to follow that and trust that. And just stay safe out there, okay? Practice patience. Remember, patience pays. We spell patience with a P-A-Y because patience pays.